Good morning. You're watching a remote broadcast of Business World Live. I'm Jes Delos Santos. It's 10:35 a.m. this Tuesday in Manila. We are over an hour into the trading day. Let's go straight first to our top story. Work on the proposed Bulacan airport will proceed later this year amid the COVID-19 pandemic. Transportation Assistant Secretary Goddess Hope Libiran said San Miguel Corporation plans to break ground by October after the so-called Ghost Month. This year's Ghost Month runs from August 19 to September 16. SMC CFO Ferdinand Constantino earlier said the jobs creation from the project is seen to help stimulate the economy amid the crisis. San Miguel Holdings Corporation is the SMC subsidiary handling the 734 billion peso project, which involves the construction of a 2,400-hectare hub with 4 parallel runways and expandable to 6 runways, 8 taxiways, and 3 passenger terminals. The company hopes to finish the first 2 runways in 3 years, while the remaining in 4 to 5 years. San Miguel and DOTr signed a concession deal in September last year. Under the agreement, San Miguel will build, operate, and maintain the new Manila International Airport for 5 decades. The airport targets to accommodate 100 million travelers a year in a bid to decongest the Ninoy Aquino International Airport. However, aviation industry expert Avelino Zapanta expresses skepticism about the proposed Bulacan Airport as well as the Sangli project in Cavite. He says timetable for both projects may be pushed back, if not terminated, amid the health crisis. Zapanta, a former CEO and president of Philippine Airlines, notes airports are currently the ones putting much restrictions on airline operations. He says even LGUs that used to court airport projects are now rejecting flights, saying apprehension will remain and demand will stay weak unless a vaccine gets discovered. Speaking of San Miguel, let's try to check in on how the conglomerate is doing the start of Tuesday's trade here. And things are looking pretty well here for the stock. They are in the positive territory. The stock here now is inching higher by 0.8%. They are priced at 99 pesos and 50 centavos a piece here. We did see San Miguel, as you can see in the chart right here. They did experience a bit of a trench on a Friday, but then managed to make some gains yesterday and still eking out some increases here. Again, over the past 3 days, San Miguel is up 1.4%. And more developments here for the conglomerate. They are readying their dollar-denominated the bond offerings, this time even tapping both a securities and chartered bank in the process to arrange a series of investors' calls across Asia and Europe. Now, should this push through, it will be part of San Miguel's $3 billion medium-term note and securities program registered at the Singapore Stock Exchange. That program, according to San Miguel, is meant to support the infrastructure projects and to refinance as well their existing obligations. Again, San Miguel is so far enjoying the start of Tuesday trade in the positive territory. I can't say the same, though, for the local bourse here. You have local shares here inching lower. We are down 0.6% to 6,116. Make that 6,117.73. That's after experiencing or eking out gains on Monday's trade. Recall that yesterday we are up over 1% to 6,150. Things, however, are reversing at the start of the trade. Luis Lumlingan of Regina Capital is saying that yesterday investors were setting aside mixed U.S. earnings data to retrace some of last week's losses. Investors, in fact, according to him, were on bargain hunting mode while waiting on U.S. jobs data as well. Recall that Wall Street indices sank by as much as 2% as a number of U.S. states imposed business restrictions due to a surge in cases. But over here, you have one brokerage firm already betting on the index, somehow still making some gains by the end of 2020. Philstocks Financial is saying, they are seeing local shares within 6,550 to 7,050 by the end of the year. Pre-pandemic, they were calling it at 8,700 to 8,800. But that, of course, seems unlikely now that they're not that optimistic about corporate earnings, especially. You have listed stocks here earning an average of negative 20% to 2% by year end. And at the same time, you have to consider that second quarter, the period when most businesses had to shut down, is bound to be the deepest rut for listed companies, according to Phil Stocks. Most companies are expected to still be on the negative side. And Japita Chanko is saying the index's possible growth would latch on the country's economic performance. A faster recovery would mean that we might end the year closer to 70-50. That, though, if you try to take a look at this chart right here, that, though, is still going to be far off from where we started at the start of the year. We did manage to, in fact, hit a high back in January of as much as 7800, but looking at Phil Stock's predictions here, the highest that we could go for them would be at 70.50 at the start, at the end of the year. Now, moving on to some specific stocks here, AC Energy, that's after, they're saying that the takeover of Australian Infigen is already getting clouded. This time, they're debuting in India for a new renewable energy project that's via a 140 megawatt solar farm in the desert of Rajasthan. That's called the Sitara Solar Project. Now, that's part of their joint venture with HK-based UPC Renewables Group. That's going to cost the company some $68 million. The project is meant to supply Solar Energy Corporation of India. They won that through a bidding of as much as a price of 2.48 Indian rupee per kilowatt hour over a 25-year period. That is expected to be operational by the first quarter of 2021. According to AC Energy, India is one of the fastest growing markets for renewable energy. That is also going to form part of AC Energy's capacity target for renewables, which is targeted at 5,000 megawatts. Looking at Ayala and AC Energy here, they are on a tear over the past 3 days here. They have been gaining as much as 5.5%. And on today alone, they are up 3.6%. The stock is now priced in at 2 pesos and 30 centavos a piece. But more on energy talk here. The ERC, Energy Regulatory Commission, is flagging 12 distribution utilities that's for possible advisory violations for billings during the quarantine months. That as they've recorded 47,000 complaints over the period. Recall that the number of consumers experience increases, especially with a lot of them doing work home based at the same time. Summer months expected, of course, that consumption is bound to be higher during that period. Recently, you have the ERC ordering a payback of some of the portions like feed-in tariff allowance or the fit-all and the universal charge environmental charge. Distributors also were tasked to refund overbills, at the same time refund those who opted to pay on installment basis. Now, now from there, let's move on to media talk here. Following ABS-CBN's shutdown, media bigwigs GMA and TV5 are expected to bolster their infrastructure and content investments, that's according to Kantar Media Philippines. That is to somehow approximate the footprint left behind by ABS-CBN, especially in the rural areas. For GMA, aside from additional digital channels, the chairman and CEO, Felipe Gozon, is saying that they're also planning to launch a major project soon. That comes after launching a For the Box, their DTT receiver. Now, as for TV5, you have Manny V. Pangilinan quoted in the Philippine Star saying that TV5 is beefing up its entertainment content and that they are in fact willing to absorb ABS-CBN's displaced employees. According to the KBP here, GMA now covers 2/3 of the TV viewing experience in the country, and TV5 has since increased shares around 2.8% to 9.5% of the viewing public. Looking at GMA stocks, however, you'd see here, they did see, of course, quite hefty gains here after the revocation of the franchise of ABS-CBN. Still gaining here over the past 10 days. In fact, they are up close to 14% here. The stock in the green still, they are up 3.7% to 5 pesos and 96 centavos a piece. Here are other stories we're watching this morning. Small business loan applications filed with the DTI's financing arm have reached 3 billion pesos. That's triple the agency's initial funding allocation. Loan applications before the Small Business Corporation are now at 3.4 billion pesos across 23,000 applicants. But SB Corp only has 1 billion pesos allocated for loans under the government's economic relief program for MSMEs. This is triggering a scramble to increase the size of the facility with the support of government banks. Trade Secretary Mon Lopez is hoping for additional funding of nearly another billion pesos by early August. These loans are expected to help businesses recover amid the pandemic and may be used to update loan payments, replenish inventory, or add working capital to restart the business. The department is still in talks with Land Bank and the DBP for the additional funding. Lopez says the amount is still being discussed. Also, onto other stories here. Speaking of loans, the government just signed another $370 million loan agreement with the World Bank. The amount is expected to fast-track the process of dividing some 1.4 million hectares of land among beneficiaries of the Comprehensive Agrarian Reform Program, or CARP. Specifically, it will fund the support to parcelization of lands for individual titling or split project, which will split collective land ownership certificates into separate land titles for about 750,000 farmers. The split project costs $473 million, with $103 million to be provided by the government. The World Bank loan matures over 29 years with a 10.5-year grace period. And lastly, a measure creating an e-commerce bureau has hurdled the House Committee on Trade and Industry. Committee Chairman and Valenzuela Representative Wes Gatchalian says that if passed into law, the e-commerce bill will cover all online commercial transactions. These include retail, online travel, online media, ride-hailing services, and fintechs. Gatchalian, however, clarified that consumer-to-consumer transactions and online activities that are already regulated will be exempted. According to the bill, online merchants who fail to register their business would be liable for fines between 500,000 to 5 million pesos. Not the most stellar of years for car sales. The industry severely scratched by the pandemic, with car sales diving by 51% in the first half of 2020. But crisis notwithstanding, one car manufacturer even launched 2 new cars in the new normal. To talk about that, we have Ford Philippines Managing Director PK Umashangkar. PK, good morning. Great to have you here with us on the show. All right, as expected, Uma, car sales badly hurt due to the crisis, down by half. How was the first 6 months of 2020 like for Ford?
We start off on a good note. I would say that the first couple of months was really roaring high. For example, the Ranger was the highest selling pickup nameplate starting from December and January. It went on a very successful note. And yes, when the pandemic hit us sometime mid-March, the segments and the industry tanked, which was expected because that was what was seen around the world as well. And the good news is that as we came off the Q2, Q3 promises the resurgence of the Filipino consumers. So we see our forecast being slightly improved from what we were originally thinking, but a lot more to see in that space at this point.
But at least, can you give us some figures here by how much has sales at least dipped over the first half of the year for Ford?
So I would say the wide industry forecast that the 2020 automotive industry will tank by 40% at least from the prior forecast, the pre-COVID levels. And much of it is going to sit in the Q2, which suffered the most in terms of our, the lockdown situation. And rightfully so, the government acts with respect to supporting what is required in the marketplace at this point in time. But there's a slow recovery seen, but I don't think the industry will recover to the pre-COVID levels even at the last quarter. Maybe we'll get to about 75 to 80% levels. So overall, full year, we see anywhere between 30 to 40% drop in the segment overall.
All right, things are not expected to at least go back to pre-COVID levels. But at the same time, were there any behavioral changes for car buyers that you noticed during the pandemic?
Oh, definitely, yes. The consumption online has become multifold at this point in time, and to support that, Ford has done several initiatives in terms of allowing consumers to engage with us on an online portals. We are able to engage with them through our sales consultants by offering vehicle demos virtually to them, and also provide transactions online, cashless processes, etc., which allows consumers to safely engage with us. To also what we did to that is launch something called Ford Safety Guarantee, which reassures consumers that to engage with Ford in a best and most sanitized process that gives them the confidence that the safe engagement is always the Ford promise.
And this digital push that you are maximizing during the period of the health crisis, do you think this is something that you are going to look into even beyond the pandemic?
But that's a great question, Jess. Yes, as we all settle into the new phraseology called new normal, some of that impact is going to be there. It's here to stay. For example, consumers remotely engaging with us, consumers wanted little amount of physical engagement, as little as possible. That will probably be there. That the uh, you would probably carry that for a long time to come. So we as businesses need to adjust and be appropriate to consumers to engage with us. So yes, contactless payment systems, remote engagement, pick up and drop facilities where customers have minimal engagement. Plus the technology also lends itself in a way where Ford vehicles today talk about once a year vehicle service or 10,000 kilometers, whichever is earlier. So you don't have to get into the dealerships that often. That minimizes their engagement with us as well because of the engine technology allows us to do that. But yes, this is here to stay, and we need to get ourselves tuned to the new normal and the way consumers want to operate.
And one way that you actually get to spark confidence, at least for car buyers here, is through financing. So did you have to make some adjustments here when it comes to your financing just agreements, at least for your customers?
But that's a very important part of a business because the financing end of vehicle business is almost two-thirds and above for Philippines. So it's important that part of engagement is done safely and securely. And most important is that while the financing business gets done, are the consumers ready to pay for the vehicle as they come off the situation that we are in today? So we, engaging with the banking partners, have launched something like a deferral program or low payment at initial engagement programs to alleviate the pains of paying high as they acquire the vehicles. For example, a couple of our products has got a deferral programs up to 4 months. So you acquire a vehicle now, start paying 3 or 4 months down the line. So that kind of alleviates the pain for consumers at this point in time. At the same time, gives them the power to get into the vehicles much earlier. So yes, that the financing angle of business is the most important part of the auto vehicle sales at this point in time.
And at the same time, what operational changes you have had to put in place during the pandemic here, especially when talking about not just your customers here, but also your employees and your dealers?
That's very important because all our stakeholders, dealers, employees are critical in this part of business. So when we went into a lockdown, March the 16th, what we did is that the work from home protocol was put in place for Ford employees, and even dealers started doing the same thing. And during that phase, we started crafting something called, a return to work toolbook, which it's about 115-page document, which clearly highlights every aspect of revised new normal engagement to the consumers. And we went about training every role holder within the dealership for them to do a proper engagement when customers come by. So we ensure that this philosophy is completely manifested in every engagement we do with the consumers. So they have a safe engagement, but we also have a process behind to deliver that in a sustainable manner over time. In fact, there is a video that we have put in social media talking about Ford Safety Guarantee to highlight the same thing. For
Mm-hmm.
employees, as I said, the return to work toolbook, while it is there, we are very careful about the return to work processes. We have allowed an absolute remote working choices with employees. Employees will get back to work when they feel comfortable to get back to work. That's the level of choice that is there in Ford employees at this point in time. I don't believe that anytime soon this year our employees will be getting back, not because they don't want to, because we made the work from home as a viable alternative for them. In fact, we've allowed employees to take home their furniture from the office, their chairs, their desktop machines, their even the mouse pads and stuff like that, which gave them a complete freedom to work from home in the way they were working while they were in the office premises previously. So yes, that's a new normal. Maybe Ford will have a significant portion of its people always working remotely going forward.
All right. So even in a sales-driven industry like like the automotive industry, work from home setup still a viable option. Now, how are things looking like for the quarters ahead for Ford? What are your targets and what are you banking on this time around?
So just as I said, definitely the Q3 is looking up. In fact, the month of June came in stronger than what we thought. That is a beginning of green shoots, I would say, where the pessimism that we built in our industry forecast is kind of weathering off, and we can see the improvement coming through. Over 16,000 vehicles delivered in the month of June is a great number from what we originally thought. July is probably going to go over 18,000 at least, which is a good thing for us because July traditionally is a slower month than June from an industry experience, but it is going to be higher because of a low base in the month of June. That's not just done by the new product introduction. It is the resurgence of the consumers. We are seeing increased amount of prospect base in our system. We have seen our year-on-year prospect inputs higher than what it was previously. That shows that the consumers out there are looking to own a vehicle. That is very positive. We have to work through with them to make sure that the processes like the financing part of the business is available to them, accessible to them, easier for them to make the business work. So I have a strong view for the second half of this year. We will bounce back, and I believe the Q4 should be at least 80% levels of what it was last year.
All right. And this time around, you did mention new product introductions. You're braving the new normal by introducing the Ford Territory. That's bound to go online next month, as well as you're launching new models of the F-150 and the EverSport. Why brave the market now of all times?
Uh, that's a very important part of a business, Jess, because while product plans take a longer gestation, anywhere between 12 months to 2 years before it comes into fruition in the marketplace. So all the products were already in the pipeline. We were looking for the right moment to engage with the consumers, understanding the sentiments and the willingness of consumers to step out. And we started off with the Everest Sport launch end of May. That gave a great support because we were the first ones to go out and do an online launch. And we had good support from the media with respect to that, and more than that from the consumers, where Everest Sport started doing great inroads at the price point that it was launched at 1.898 million. Followed that confidence and few other manufacturers going online, we brought in the icon back to Philippines after close to 2 decades. That is the F-150, as we introduced it uh, in the month of May. What it brought to us pretty much is the testimony that this product is here to redefine the expectations of the consumers in this market. And what we did also is to make sure that we engage media in a way that they have an ability to look at a vehicle through a camera they can remotely operate with a person on the studio while I was responding to every one of their questions. I took media interviews starting 9 in the morning all the way to 3 in the afternoon with my colleague continuing all the way to night. So we gave time to every media house to have their engagement to make sure that they do not lose out on their physical engagement with the product and get to know about the product up and close. That came out to be a new normal in the way of B delivering an online launch became a benchmark for other manufacturers to follow. And yes, we are on the next process right now. We are on the pedestal to launch an entirely new nameplate in the Ford stable very soon.
All right.
Very soon.
Definitely lots of optimism there for Ford Philippines here despite the pandemic. Great things ahead there for you guys. Thank you very much, PK Umashangkar, Managing Director of Ford Philippines.
Thank you so much, Jess. Appreciate the opportunity.
Let's have a quick check of the market movement here. You see here the index still in the red here, down 0.5% to 6,120.33 here. Looking at some of our stock movers here, you'd see here JG Summit leading the pack up 1.6%, followed closely by Semirara and Ayala Corporation. But I want to draw you in on one particular stock here, Agri Nurture. They are on a trading halt this morning. That's after they did enter a memorandum with Hatch Asia and Pay8 to acquire 51% of Pay8. That amounts to 377.9 million pesos. They have yet to finalize a mode of acquisition, but that move is meant to finalize AgriNurture's completion of its envisioned agricultural ecosystem. They are targeting to reach farmers in unserved areas. At the same time, they are Hatch Asia, just to give you an idea, is engaged in IT, providing multiple systems and platforms to various industries. Now, again, the index still in the red here, down 0.5% to 6,121. And that's a first look into the business day this Tuesday, July 21, 2020. Catch us again tomorrow at 10:30 a.m. I'm Jes Delos Santos. We are One News.